Kitco News special coverage of the Denver Gold Forum is brought to you by New Pacific Metals.
This is Kitco News. I'm Michelle Makori, and we are at the Denver Gold Forum in Colorado Springs. And joining me now is Randy Smallwood, CEO of Wheaton Precious Metals and chairman of the World Gold Council. Randy, good to have you with us.
Always a pleasure, Michelle. Thank you.
And it's a real treat to have you here in person. This is one of the first few conferences where it's non-virtual. This is a hybrid event, and we do have people interacting in the flesh, so to speak. What's been your read on the general mood?
Those that are here are really happy to be here. It's good to get face-to-face interaction again with so much of the industry. We're running about 50% of our meetings are in person, and the other 50% are virtual. So yeah, it's a good first step. Hoping that it is a first step, and we continue getting back to normal or closer to normal at least.
Do you think as much can be accomplished in a virtual capacity? Do you find that
no, not at
there's
all.
a big difference?
As I'm watching you and us talk here, communication is so much about body expression, and it just doesn't translate well through Zoom or Teams or anything like that. And so face to face just makes so much of a difference in terms of building relationships and understanding each other. Communication. That's what it comes down to.
And speaking of face to face, building relationships and communications, we had an opportunity to chat a little bit at the reception last night.
Yes, we did.
And you told me that your precious metal pick of the moment is silver. So make your case.
Good gosh, and now you've got me on the spot as the chair of the World Gold Council. The push towards electrification, copper, of course, is getting a lot of attention in this world, but silver is a much more efficient metal, and it doesn't take a lot of silver to make a big difference in terms of efficiency of moving energy around, and that's why you see it in solar panels, and you see it in high efficiency mobile phones, mobile electronics. And as those kind of issues become more important to society, silver is going to play a bigger role. So I really do think that with that ultimate that attribute that silver has, that it is truly the metal of the future, and it's going to continue growing. We see increasing industrial demand all the way across the board in the silver space. And so, if we want to talk about electrification and about being more efficient with our energy consumption, silver is going to be involved in that, seriously involved in that.
The case is strong for that. I mean, there is clearly a big move to decarbonize. We have countries and states pledging to eliminate all gasoline, fossil fuel vehicles by 2030, 2035. But we're not seeing this catch up in the silver market. Why not? Why is the price not budging?
We're seeing higher prices. There's definitely, I like to describe the precious metals market right now as sort of almost coming off a bit of a pandemic bump. We saw a real push up in gold prices last year to record levels. We saw silver push up to a good high numbers. As the world is sort of learning how to work through this pandemic and the risks associated with it are becoming less and less in terms of us moving forward, we've seen numbers come back, but we're still pretty happy with these prices with respect to both gold and silver. You're right, the fundamentals behind silver to me imply that it should actually outperform over the next while, especially when you see shrinking supply. We don't see as much silver. One of the things that makes silver very unique is that it's generally produced as a byproduct, and so you can't turn on silver mines to satisfy that extra demand, and so we should see some good strong strength in silver because it's always had higher beta than every other metal in the space, mainly because only 25% of it comes from silver mines, and the rest of it is produced as a function of lead zinc prices or gold prices or copper prices, and so I think we're pretty well positioned to start seeing some response in the silver market.
Do you have a price forecast, an outlook over a time horizon that you care to share?
Well, I always give one or the other. I never attach it to a time horizon.
You bring them together, though, Randy.
No, we have been in a long, continuous uptrend in precious metal prices for the last 20 years. We've had obviously some volatility in that, some numbers up and down, but think about where we were 20 years ago in terms of precious metal prices and where we are now, and there's no way we'll ever get back to that. This is a long, continuous uptrend that reflects what precious metals are here for.
So we're not going backwards, but from a silver price point of view, 30 by when?
30. It wouldn't surprise me to see 30 sometime next year. Again, a lot of it comes back to the economic recovery and the pace. There's so many other factors that play into it, but I have no problem envisioning silver over $30 an ounce.
What about this factor? Because you can't have a silver conversation without this idea that somehow the silver market is manipulated or suppressed coming up. That because silver is used across so many industries, that there are a lot of big players that have a vested interest in suppressing it, keeping the price artificially low, and that either way, there's not enough physical silver to cover all the paper silver out there. Care to weigh in on that theory?
Well, one of the risks of the silver market is that it is a small market. If you know any of our company history at Wheaton Precious Metals, we used to be Silver Wheaton. And one of the reasons we expanded into the broader precious metal space is that we found the silver market just too small to allow us to grow to where we wanted to go, and we needed to expand into the broader precious metal space. Anytime you have a small market, it is more susceptible to influence from certain actions and stuff like that. And I think that's one of the reasons that silver probably gets a little bit more of that branding than other commodities out there. That being said, people buying into it, they eventually have to sell into it. You can't build up stockpiles without ultimately having to feed those stockpiles back into it. And so, in my eyes, the market is pretty efficient in terms of normalizing and capturing that. You're going to get fluctuations and volatility, but it ultimately will catch up to itself.
All right. Well, on the flip side of the decarbonizing trend is palladium, because palladium obviously relies on fuel engines. So what's your outlook there for palladium and platinum?
Well, I've driven a Tesla now for close to 10 years now, and I'm a believer in electrification. There's no doubt that it's the way to go, just for so many reasons. And so there's no doubt that palladium, which is generally consumed as a catalyst, probably has a bit of a limited future, a long-term future. That being said, increasing environmental standards are also going to probably drive higher demand for catalysts to limit the impact from internal combustion engines. And so if catalyst consumption on a per unit basis climbs as we see a decrease in ICE engines, internal combustion engines, you'll see an offset. And so I'm still very confident in palladium and platinum as catalysts. There's going to be still a very strong demand for these over the next 20 to 30 years. I don't think it's going to take us that long to truly get electric when it comes to transportation. And so a combination of probably slightly lower internal combustion engines out there, but higher standards will probably offset and keep demand where it is right now.
Okay, but it's got a 20-year run left, palladium, at least.
Yeah, yeah, definitely.
All right,
definitely from the catalyst
Let's
perspective.
focus on your favorite precious metal now, as chairman of the World Gold Council. And of course, inflation has been a factor that surprisingly hasn't really moved gold as much as we'd like. I do want to get your read on the latest CPI data. Inflation rising on a smaller than expected level, up 5.3% from a year ago. So easing a little bit, but still up 5.3% from a year ago. Mm-hmm. Does this bolster the case for the market that inflation is indeed transitory, as Fed Chair Powell keeps on insisting? What's your read on this?
Well, I just can't believe when we're sitting looking at the value of hard assets around this world and how they measure it as a constant relative to the cost. I can't believe that this isn't going to become more of an issue over time. We see this. All it takes is looking at a graph of money supply, both T1 and T3 money supply, to build confidence and build comfort in the fact that there has to be some inflation that's going to pile in. We're already seeing reasonable inflation rates. And then you look around and you look at the raw materials and the value of, even in the mining space, copper, zinc, lead, nickel, uranium, everything is up substantially, and that is ultimately going to have to work its way through the system into the consumables that we as a society need in order to maintain our standard of living. And so that pressure is going to be continuous, and I think it really bodes well for the precious metals as a store of value against that inflation.
What about for gold in particular?
Gold has been around forever as a store of value through thick and thin.
Is it still a good hedge against inflation, though, when the S&P, for example, is outperforming returns?
Yeah, I mean, the S&P, of course, is measuring everything in fiat currencies, and so as long as we're measuring against fiat currencies, there's all sorts of other investment opportunities that people can focus into. But I can tell you that gold is the store of value. It's the top of the class in terms of a store of value, and something that that will constantly be there as a reference point to measure how everything else has been impacted through this.
Does the World Gold Council have an official outlook on a gold price?
Well, John Reid is actually down and giving a keynote speech right now, right behind us, just down the hall here.
I'm missing that, but I'm getting to talk to you.
And he's just coming out with the update, and I didn't get a chance to read it. It did get forwarded to me this morning, but we've been so busy here at the Denver Gold, I haven't had a chance to read his official update. But he's actually on the screen right now as we speak, down the hall.
We'll have to check what he said. How about your official outlook then?
My unofficial outlook is it's bullish. I mean, again, we have seen a continuous uptrend here. There's a base uptrend that started 20 years ago in precious metals, and that trend hasn't changed. And what we've seen is a few incidents like pandemics and housing crises that have given us some volatility, some up, and then as we come off of those. But we still see good, strong, and the fundamentals are all there. There's absolutely nothing that points against gold as a requirement going forward as store of value against fiat currencies and just the increase in money printing has to come home at some time. It is coming home. That's what we're seeing.
Well, the World Gold Council seems to have been taking a more proactive approach in conveying that message. I've been seeing a lot of World Gold Council commercials. Is that a change in strategy?
Definitely. In fact, just before this meeting, David Tate, our CEO at the World Gold Council, presented down the hall here and introduced Gold 247, which is an initiative that we're kicking off to bring gold into this, as we call it, the fourth industrial revolution, which is the digitization of everything. The whole world is going through this. This pandemic, I think, has accelerated that whole process in terms of how everyone is connected and such. And so we've got a very strong initiative and full support of all of our members of the World Gold Council to try and push forward with increasing gold's fungibility in terms of being able to trade it around the world and be consistent and confident in terms of what you're working with. Accessibility, 24/7. 247 stands for 24 hours a day, 7 days a week, access to trading gold on a continual basis. Accessibility, of course, all the way, and integrity, improving provenance records to show where your gold's come from, delivering that back to the customers. So really strong initiative that we've kicked off late last year, but this is the first time we've talked about it, and it's pretty exciting times.
And utilizing blockchain technology?
Definitely. Blockchain is definitely here to stay. In terms of having a universal ledger, blockchain will be part of our future. It's already part of everyone's future right now. It's already part of our existence currently.
Okay, well, I can't talk about blockchain without mentioning Bitcoin and gold. And there is...
It's a common mistake. There's quite a difference between blockchain and crypto.
Yes, of course. Yes, that's not what I'm implying.
Yeah.
But, of course, Bitcoin works on the blockchain platform, and so do a number of other cryptocurrencies as well as on other blockchain type of platforms. But I want to draw our viewers' attention to the World Gold Council commercial, which I believe is called Mr. Economy. So
internally, we call it Mr. Economy. But,
you have Mr. Economy referencing tulips and bubbles and how gold has endured through every financial crisis, outlasting thousands of years. Let's take a look.
But I've seen centuries of rises and falls.
Continues with no clear solution.
I had a love affair with tulips once. Lived through the crash of 29, an early dot-com hype. Watched mortgages play the villain beside a true Greek tragedy. And now here I am, with one companion that's been with me for millennia, hedging the risks you choose and those that choose you.
So Randy, I can't help but watch that commercial and see this as a counter messaging to Bitcoin.
We're here, the mandate of the World Gold Council is to educate everyone about what the benefits of gold are. And so we're not going up against anyone. I don't even think crypto's mentioned in the message, but
it's very subtle. But
what we're talking about is the fact that gold has always and will always be a store of value. And in fact, it's a bit of a shame we couldn't pull up our latest ad, which is called Miss Economy, and have that one played because. But it underscores the fact that gold has been there to hold economies together, to hold value together, to preserve value from generation to generation, to society to society.
Look,
it's always
no doubt about it. The history is there. But does the World Gold Council perceive Bitcoin as some kind of threat that needs to be addressed in the narrative, because institutional investment in gold has declined. And now with some of the ESG concerns in Bitcoin sort of being addressed, we're seeing as well some regulation issues somewhat being addressed. We're seeing more institutional interest in Bitcoin. So does the World Gold Council perceive Bitcoin as some kind of threat?
We don't look at, first off, Bitcoin by itself is just one of many cryptos. And so there's no specific focus on any of just Bitcoin. There's no doubt cryptos are a unique exchange medium that we only look at it as far as the fact that the problem with cryptos is that they can be copied. Bitcoin can be copied. Today, Bitcoin is the flavor of the day. I'm going to guess that 5 years from now, Bitcoin won't be the flavor of the day, that it'll be, perhaps Ethereum or some new flavor of the day. They can all be copied. Gold can't be copied. Gold stays as gold.
Gold stays as gold, no doubt about that. But the Bitcoin maximalists would argue, Randy, that Bitcoin...
The ones that want us to buy the Bitcoin,
yes, of course, everybody has an incentive. Yes, everybody has an incentive, but they would argue that Bitcoin is the only true store of value asset because there's only a limited amount of Bitcoins in circulation, and there's no...
But there's only a limited amount of Ethereum in circulation.
No,
there's only
you
a limited
can create
amount
more
of,
Ethereum. You can create more Ethereum.
They've all got, but there's a number of cryptocurrencies out there that have limited amounts.
Right.
So,
I'm just saying that the Bitcoin maximalists would not put Bitcoin in the same category as other cryptocurrencies. Granted, everybody has incentives for saying that, and that Bitcoin is so-called a digital gold, the only true store of value, for a number of reasons, including the fact that you can't create anymore, and that the creator, Satoshi Nakamoto, we don't know who he is, and it has that whole element to it. But it's not so much gold versus other cryptocurrencies in the way it's being positioned. It's gold versus Bitcoin, or you could say, why choose? Add both to your portfolio.
I think what I like is the imagery that all the proponents of Bitcoin have. Whenever they show a visual of a Bitcoin, which doesn't really exist, it's a gold coin. That in itself says enough, doesn't it? They always show it as a gold coin. So you're welcome. Cryptos do play a role. There's no doubt they work as an exchange medium. You just better hope that you're not on the short side of that exchange. I can tell you right now, I would not want to put Bitcoin underneath my pillow and pick it up in 5 years and assume that it's carried anywhere near the same value that if we're going to do something like that in gold. So gold will always be there as a store of value.
All right, keeping bags of gold underneath your pillow then, Randy. Let's focus on Wheaton Precious Metals, because you guys have done remarkably well. A very strong balance sheet. According to the presentation you gave, generating close to $1 billion in free cash flow this year. Mm-hmm.
Yeah, no, these are really good times to be in the gold business, and really, really good times to be in the gold streaming business. And so precious metals, we were, debt-free for the first time in a long time, although we've always been comfortable on the debt side, and debt is so incredibly cheap. But our cash flow has finally caught up to us, or our production and our cash flows have finally caught up to us. And so we're having a tough time spending the money fast enough. Our job at Wheaton is to put money back into the ground and continue to give our shareholders exposure to high quality, high margin assets and high margin production. And it's quite clear that we're not doing a good enough job at that. We have to continue working at it. That's why we're at conferences like this.
And have you identified any targets potentially?
Oh, definitely. In fact, both this conference and the conference last week, we've had some good discussions. We are active. There's no doubt that every time there's capital, every time there's growth in the mining industry, there's a need for capital. And our business at Wheaton is to supply capital to the mining industry. And so as long as there's capital being spent, we have opportunities in front of us.
Well, as the world's largest precious metals streaming company, what are you seeing in terms of consolidation?
There's no doubt that there's a larger. I mean, it seems like every week there's another royalty company coming out of the package. When you have a large population like that, I think there's probably a few laws of biology or something like that, or laws of nature that say that there will be some consolidation coming. At the top end, it's still really ourselves, Franco and Royal, and a few other sort of intermediate producers. You haven't seen a lot of change in there. On the consolidation front, we still see so many great opportunities to just invest into new projects, and that is more attractive to us than the consolidation side. But we're always watching. We're always prepared to act if we see an opportunity.
From an investor's perspective, why does it make sense if you want to have exposure to precious metals to go through a precious metals streaming company, hold that stock as opposed to buying a mining ETF or a basket of other miners?
Well, I think it comes down to risk and upside potential. Streaming, the risk profile, the costs are all defined. They're all fixed by the contract. The upfront payment, our capital cost is the upfront payment in acquiring the contract, and the operating cost is fixed by contract as defined, and so there's no cost surprises, and that has been one of the biggest challenges about investing into the mining industry, is that the industry has, and we're getting better at it, but the industry has got a horrific track record in terms of delivering on cost promises. Streaming, you take that risk out, and yet a streamer still gets all the access to the exploration success, to the upside potential, expansion potential, commodity price exposure. In fact, a streaming company, because it has that base production cost on a per ounce basis, has leverage over owning just bullion or having just royalties on this. We actually have leverage, and so we outperform relative to just owning bullion. And so our risk profile is very similar to owning bullion, but we get all the upside of a good, well-run operation. And if you're selective about what we invest into, and Wheaton, we have long been focused on the highest quality assets. We 90% of our production comes from the lowest half of the respective cost curves. These are high margin assets that not only deliver a lot of value to the operators and to the communities and everyone around that benefits the countries that receive tax revenue, but they also deliver a lot of value to us. And these are the mines that are going to continue delivering for us. And so just the portfolio is working beautifully for us right now, and lots of opportunities to continue growing it.
All right, well, good luck with those opportunities. I'm sure we'll hear about them in the future. Thank you so much for joining us.
Michelle, it's a pleasure. Thank you.
Thank you, Randy. And thank you for watching Kitco News. I'm Michelle Makori. Keep it right here for more.
Kitco News special coverage of the Denver Gold Forum is brought to you by New Pacific Metals.